count you down in a second.
Right.
Right. Keep those eyes on that.
We're having a staring match.
Okay, we're counting down from 3. We're going in 3, 2.
Britain's business gets a big boost today with the launch of a new fund which is going to be investing hundreds of millions of pounds into small companies. Victoria Bates from Land Trust Asset Management. Tell us about why you're backing British business.
We're really excited to be here to announce the launch of our Lion Trust UK Microcap Fund.
It's a mouthful.
It is a mouthful. And the purpose of the fund is really to invest in some of the smallest businesses listed on the stock market today. So we'll be looking to invest in businesses which are capitalised under 150 million market cap. So true micro caps in every sense of the word. And the reason why we're excited about them is, well, history shows that they do outperform. The best possible index to track the performance of smaller companies is the Numis 1000 index. And actually, if you look back at that index over the past 60 years, it's outperformed the FTSE All-Share by over 13 times, which I don't think anybody could argue is incontrovertible evidence that these micro-cap businesses do perform.
How big will this fund actually become, do you think?
We're trying not to actually worry about that at this stage in time. Clearly, we're only at the launch of the fund at the moment. But we think that the ultimate capacity of the fund would be anywhere between 200 and 400 million. For the time being, though, what we're really excited about is to be tapping into the entrepreneurial phases of these companies' growth, a time when these businesses are dynamic, they're gaining market share, they're perhaps creating a market need that their customers didn't even know they had until these businesses came along. And it's an area of the market which you may or may not know is actually chronically under-researched, we believe. So while there are about 22 analysts covering every FTSE 100 stock on average, actually, for the companies that we're looking at, the average is only about half an analyst, which is ridiculous when you come to think about it. It's a huge vein of opportunity for us, and it's one we're very excited about.
You've talked about return, you've talked about Britain's small businesses being the focus of your attention. What is it about this country that makes us a nation of shopkeepers, a nation of entrepreneurs? What is it about Britain that produces so many good businessmen and women?
Well, I think what you have to bear in mind is that actually the UK market is very favourable to smaller companies. I'm sure you know that there's a stock market, a junior stock market called the alternative investment market. And it's actually a very important part of talking about this fund today, which is that AIM, as it's known, has become infamous in a way for some really horror stories of investments that have gone wrong. And what we wanted to put before you today is a process which we believe can mitigate some of those risks. Of course, you can never diversify away risk completely. There will always be things like liquidity, volatility, market bubbles that you need to avoid. And we think that our process provides us with the perfect opportunity to try and mitigate those risks in the best way that we possibly can.
What sort of sums of money can consumers put in? Are we talking about a few pence in the jar, or do you have to put in hundreds of thousands to make it pay?
You certainly don't have to put in hundreds of thousands, but please do see your IFA or look at the website for more details on that front. And I think what I would like to leave you with today, if anything, is a sense of the process that we invest under. Because as I've already said, that really is key to how we invest. It's a long-term, low-turnover style. We don't invest in any jam tomorrow businesses. These are profitable companies generating financial returns. And what we really look for is for these companies to have significant intangible advantages, and specifically at least one of three things, which is world-leading intellectual property. There's a wealth of it in the smaller company end of the market. Then the other thing is a strong distribution network, either physical or electronic, perhaps a data-driven distribution network that the likes of a software company might have. And the third thing is a high degree of recurring income. We like to our companies, any company we invest in, to have at least one of those three things, as well as, of course, other intangible advantages as well. And that really forms the bedrock of our process. Once we've identified those things, we then come back to financial returns. And what we want to ensure is that by looking at things like cash flow, margins, profitability, that these companies are actually managing to translate that theoretical advantage, competitive advantage, that's conferred upon them by those intangible assets into strong financial returns. Now we ally that also with companies which have a high degree of directors' ownership within the business. We think that's absolutely crucial. It aligns ourselves with those entrepreneurs that Britain is so rich in that we discussed earlier. And we think that these things, could together in a robust investment process can really prove to be quite an exciting opportunity for investors.
Victoria, we wish you well.
Thank you very much.
And we have to leave it there. Thank you.
Thank you.
And cut.